What is up? This is the Working Investor. In this video, we're going to cover this phenomenal fund that came out, RSSX. Why am I so pumped about this fund? People don't understand the use case. I see a use case in this fund that a lot of investors do not see. It's a really powerful use case. This fund gives you capital efficiency with uncorrelated assets and has dynamic rebalances that outperforms the sum of its parts. I know it's a lot, and let me unpack this for you. And when I'm done with this video, you guys are going to understand so clearly how powerful these types of funds are, these stack type of funds. Nothing here is financial, tax, legal advice, or any sort of advice. This is purely for fun and entertainment purposes only. Please take all your risks and seek all your advisors. And see all my disclaimers. So let's go into this fund. So it's basically US stocks and gold Bitcoin. So basically for every dollar you invest in this fund, it's giving you capital efficiency exposure with a good risk parity. So it's giving you $1 exposure to large cap US equity exposure. And they're doing this capital efficiency via future. So they're giving you basically IVV, and then they're giving you like some futures on the S&P, and then they're also giving you another dollar of exposure to Bitcoin and gold. So for every dollar you have the full exposure of a large cap IVV S&P 500, and you have the full exposure of 50% Bitcoin, 50% gold. So together you have 200% exposure. These three assets in the past 10 years, let me pull up Portfolio Visualizer here, all have positive drift, right? So let's look at gold. $10,000 in each of these assets, in Bitcoin, would have given you 4,066,000 plus. That's what the return would have been in 10 years. That's a lot of return. Gold, 10 grand would have almost tripled in 10 years to 28,000. And then the S&P, 3.5x pretty much, right? So they all have positive drift. Nobody's going down, right? So they all go up nicely, but they all have their own dance. And you could see the benchmark coefficient. This is very important. So compared to the S&P 500, the Bitcoin is 0.34 correlation coefficient, and gold is 0.08 correlation coefficient. So they're very uncorrelated to the S&P 500, and gold and Bitcoin are not really that correlated to themselves. I pulled up the correlation grid from Portfolio Visualizer. I couldn't use Bitcoins. I had to use like Grayscale Bitcoin Mini, and this is about a 1 year. So correlation coefficients depend on the time periods. You're looking over 10-year period. This is about a 1 year period of time. So you could see here that on the bottom line, you see gold. Look at the bottom line. Gold to IVV, they're saying it's even a negative correlation. I guess because in the past year, there was an inverse relationship when beginning of the year when gold was up big time and the market was really down. And then gold to Bitcoin also is inversely correlated. So you see that all three of these assets behave differently, right? So they're a great risk parity to have. They balance each other, yin and yang, but they all have their own path to go up and to the right. They have their own journey. It's not like one of them is just stagnant. They're all over time going up and to the right, because I believe inflation is real, and therefore gold, it doesn't produce anything, but it's a hedge against inflation. Bitcoin as well. And if you're worried about Bitcoin going to zero, at least 75% exposure of the fund is not Bitcoin. So that can kind of hold you up. If you think like, is it real? Is it not real? I don't know. Here they go ahead and explain kind of what we just spoke about right now about capital efficiency, diversification, hard asset theme, right? And you guys can go ahead and read all of that. Of course, look at all the risks, including leverage risk. It's a real thing. I love the Q&As. Like we mentioned, they rebalance daily. They have IVV, 75%, 25% is the E-mini future contracts. Hence, that's how they get their leverage exposure. So this fund, RSSX, just came out May of this year. So I want to prove to you that there are funds that have been out there for longer periods of times, and we're going to go ahead and back test. And I want to prove to you that usually, the sum of its parts equal greater, the sum of its parts don't even, the fund itself outperforms its parts. I'm so excited I could barely even speak. So GDE, this is a fund that's been around for a while, since 2022, so at least a few years. You have some data, and it's from Wisdom Tree, and it's gold and equity. So it's this two-part exposure, and it's it's not like every $1 you get a dollar of gold, dollar of large cap like S&P. It's more like for every dollar you have 90 cents exposure to kind of like think of S&P and then 90 cents exposure to gold. So it's like 1.8x leverage. And let me pull up the charts and I'll show you the components and the sum. So we're looking total return approximately when it launched, somewhere around this area in March, let's say March 10, 2022 to today. And I'm looking at GDE and I'm looking at the pieces of it, GLD and SPY. So you see the total return of GDE is 108.8%. By the way, I'm going to send you a link to I made a video on GDE and I made a video on BTGD, which is Bitcoin Gold. And I'll send you guys links in my description. Look at GLD. GLD, gold, underperformed this, right? Look at SPY in this period of time, total return, 56%, GLD 67%. Why is GDE 108.8? Wouldn't you think that it should be some kind of average between the two because that's what it holds? No, because they rebalance. You know what rebalance means? Rebalance is basically another way of saying sell high, buy low, sell high, buy low. You take two uncorrelated assets, the S&P and gold, and they're very uncorrelated, 0.08 correlation coefficient, but they both kind of go up as you see, right? But it constantly buys SPY on the low and sells gold on the high, and then it sells gold and vice versa. So because it's constantly getting great prices between these two funds, it's doing like an arbitrage between the funds, if that's even a real correct term for this, it does better than the two components. As you can see in this example of BTGD, Bitcoin Gold, again, I'm looking at this example because our fund that we're talking about right now, it just launched in May. I don't have a big track record, but look at BTGD. This launched around October of 2024, so it has a few extra months. We're getting close to a year, right? We have about 10 months of track record, and this is 100% Bitcoin, 100% gold, which is not perfectly correlated. And I'm looking at approximate time when it launched till now, and you could see that BTGD total return is 88.83%. If you look at gold in this time period, it's up 24.59%. You look at Bitcoin US dollar price, it's up 73.23%. Again, you'd think it would be an average of Bitcoin and gold somewhere in the middle, but no, it actually outperformed both because of the strategic rebalance, aka another way of saying it, sell high, buy low. It does it for you all the time. That's the secret sauce. Two uncorrelated assets, both have positive drift in general. They may have their different time frames, but positive drift over a long period of time that I'm bullish in myself personally. Past performance is not indicative of future gains, and it does strategic rebalancing. All right, let's go do our mega comparison between RSSX, that's the fund we're talking about, versus IVV, which is the S&P 500, versus gold, those are the underlying, versus Bitcoin US dollar. So those are the three ingredients that make up this fund. And we could also compare it to GDE and BTGD, but remember, this only came out around May 29th, 2025. So we have not a lot of time, you know what I mean? We only have, barely a few months in there. But you could see that RSSX total return is up 12.05%. The S&P 500 in that period is 8.35, so it outperformed the S&P. Gold is up 2.43, so it outperformed both S&P and gold. Bitcoin, however, is 13.84%. 13.84%. So it underperformed Bitcoin. But remember, the weight of Bitcoin in this fund is not, remember, it's only about, it's 100% exposure to the S&P, 50% exposure to Bitcoin, right? So it's a smaller piece, and it almost performed as much as Bitcoin. But remember, it's hedged equity, right? GDE, which we spoke about earlier, it outperformed GDE in this period of time, which is, gold and equities. And BTGD, which is the Bitcoin gold combo, again, it outperformed all these funds except for Bitcoin itself, but just Bitcoin only outperformed it by a little bit. And remember, it's only been around for a few months. Continue giving it time to constantly buy high, sell low, rebalance. Again, I cannot promise you anything. I am in no position to promise anything. Nobody knows. Nobody has a crystal ball. But this is the reason why I am personally bullish in this fund, and I'm looking to open a small position into it. This is my research I will share with you guys. Hope you guys have a wonderful trading week. Let me know what you think about this fund. Are there any blind spots that I'm missing? Again, look at the entire prospectus. What are your thoughts about it? And what use cases do you guys see? This is the Work Investor over and out. Be well.